Hello there, Maverick Currency traders. This is Rob Reinhold. It is good to be back. I've been on vacation for a little bit, and actually, I'm still there. I'm down in sunny Melbourne, Australia. So I got to say, I've really enjoyed trading Forex at this time zone. It's actually quite nice, but trading US equities in this time zone is absolutely terrible. The market opens up at 1:30 a.m. here and closes at 8:30. Not very convenient whatsoever. So let's go ahead and get into it. In this session, we're going to be going over what happened this week. We're going to take a look at some of the news, big central bank news down on Australia and New Zealand. And we're always looking for setups. So we're going to pair the strongest against the weakest and make the best trades we can this week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's go ahead and start off with the equity markets. The equity markets had a pretty decent week until Friday. Friday, the markets were down about 2%, which made them down for the week. But for the most part, it was just a really slow grind higher and it was a very stubborn move higher. We did hear from both the RBA and the RBNZ. They both cut rates by 50 basis points, which was expected. Now, this is what I love about trading. And when I first started out, I remember when news happened and then something different than what should have happened in the market. It was very frustrating because it didn't, quote, make sense in my brain. Now, I love when that happens because that is a signal that, okay, that news was already priced in. And that's what we got this week from the RBA and the RBNZ. We saw that the Kiwi actually did not go down at all this week. The Aussie went down a little bit, but the Kiwi actually was up a tiny bit. That is telling you that it was already priced in and there's really probably limited downside at this point unless something changes negatively with the New Zealand economy. So like I said, we got big rate cuts out of the RBNZ and RBA, but we didn't see a ton of downside, telling me that Aussie Kiwi are probably bottomed out at the moment. They can always go lower, but at the moment, probably bottomed out. And crypto, still totally range bound. We're not going anywhere. Bitcoin is between 92,000. Every time it gets down to that, it's a decent buy, but we haven't broken above 100,000 for a couple of weeks now. Let's take a look at the news outside of the central banks. First off, I want to take a look at the UK. We had UK claim account change, not as good as expected. So we had employment that wasn't as good as expected. And then on Friday, we got inflation higher than expected. So that's telling us that the central bank there, the Bank of England, is in between a rock and a hard place. They have worsening economic activity, but they have rising inflation. That's called stagflation. That is not a good situation. So we'll take a look at the pound, but the pound has been completely flat and untradeable lately. We take a look at Canadian CPI. Canadian CPI came out higher than expected. So we're seeing the inflation numbers come out around the world higher than expected. What is that going to cause the Bank of Canada to do? Are they going to have to reverse course? Well, the market doesn't think so. The Canadian dollar actually fell this week, but we'll take a look at that. And then last I want to take a look at is Australian numbers. We got Australian employment better than expected. So as you can see here, a ton of things happening. And this is without mentioning the US volatility that we're seeing in the new administration. Now look, I'm not going to get political here. You either like what's happening or you don't. I don't care. That doesn't matter. But what is happening, we cannot be blind to the volatility. What is happening is on a daily basis, new information is coming out about tariffs, about policy, and it's causing wild fluctuations in the market. That is likely going to continue. I don't see that not continuing. So just get used to it. That's just the new world we live in. As we always say, Maverick, trade the market in front of you. That is the market in front of us right now. All right, so let's take a look at last week as far as the numbers go. We take a look at equities. Equities dropped 1.66%. So they dropped 2% on Friday. So you can see they're up slightly for the week. International markets are doing much better than US markets here over the last couple of weeks. And I think we're going to see that continue as we see the volatility happening in the US. Crypto basically flat, down 0.9%. That's flat. Oil flat. Gold making new all-time highs. Gold is looking really strong here. People are piling into gold as a safe haven in this kind of environment. We take a look at the S&P. If we took a look at this chart on Thursday or Wednesday, we would have looked at it and said, hey, that looks great. That's a great little breakout of this resistance area here. And okay, we had a little bit down move on Thursday, but that long lower shadow told us that buyers were still there. And then we just got this nasty, nasty candle on Friday that has pretty much killed this rally. Now, look, I'm not saying kill the rally, but if you were getting overly bullish because of this breakout up here, yeah, that totally has killed that. We are now back in the range. We're now back in the range of 59.60 at the low and 61.40 at the high. That's just where we are at the moment. We are smack dab on the 50-day moving average. This is not a clear signal whatsoever. We take a look at performance. There was only one clear signal, and we have liked the yen quite a bit lately, and the yen continues to be a great performer. Outside of that, you can see the euro was down a little bit. The CAD was down the worst, but this is the one I really wanted to focus on. 50 basis point cuts, and they didn't drop. It's telling you they're likely bottomed out. Again, that's for the moment. We can always get a resumption of a downtrend, but I'm looking at these saying, okay, these are likely bottomed out. That doesn't make them a good buy. It just makes them not a great short anymore. We'll take a look at the charts here, but I think dollar short is starting to look quite appealing here. But what do I want to buy against it? Well, you can probably guess it's the yen. The yen's looking great here. Taking a look at cryptos here, plus or minus a percent, that's zero in crypto land. That is just a very, very flat week in crypto. So nothing is going on in crypto. We'll take a look at the crypto basket, and you're going to see it is not in a tradable pattern at the moment. All right, we already took a look at the SPX. Let's take a look at US bonds. And I think this is starting to be a story all on its own. We have been range bound between 440 at the bottom of US 10-year bonds, all the way up to like 480. But look, the market wants interest rates in this area. Significantly higher interest rates is negative. Significantly lower interest rates is negative. If we break this 440, I can see that's easily putting some pressure on equities and easily putting some pressure on the dollar. So I think this is a really key level to watch. A break of 440 on the US 10-year. I think dollar short is looking great. And here is the crypto market, and you can see we're getting a whole lot of activity doing nothing. We are between moving averages. We're just hanging out here. There's nothing going on here in crypto to get you excited whatsoever. So crypto is just a no trade for me. This week, we do not have a lot of information. We do get some inflation data out of Australia. We just got a half basis point cut. Look, unless this is significantly weaker than 2.6%, they're going to brush this off. Even if it's a little bit strong, they're going to brush it off. This is pretty much saying, okay, we got the 50 basis point cut. Let's wait and see what happens. So if it comes out at 2.6, probably a little bit of a relief rally off the Aussie. Other than that, I only see one big report, and it's a big one. This is the core PCE price index. 2 weeks ago, we got a really nasty CPI and PPI out of the US. But the US equity markets and the dollar shrugged it off because inside that report, they said, oh, the numbers that we use to look at the core PCE price index were pretty good in those reports. So we don't have anything to worry about because it's likely that the core PCE index comes in fine, and that's what the Fed is looking at. If this number does not come out fine, that's going to be some major problems. Just some major problems. If it's hotter than expected, then I think you're going to see steepening up in yield curves. So again, looking at that 4.4 on the 10-year, if this number comes out hot, I think we're going to jump back up to the 4.8, which is going to then strengthen dollar and weaken equities. This is a big number. I don't know what's going to happen here. If it comes out 0.3 or 0.2, I think the market probably breathes a sigh of relief, but those bond yields probably drift a little bit lower, which is going to cause the dollar to move lower as well. This is the biggest report for the week, and I think it's the only one that really matters, and that's going to be on Friday morning. So the markets are still overall bullish. And by bullish, I mean just slightly bullish. I'm like at a plus 0.5. That's where I am on this market, like plus a half. From plus 3 to negative 3, I'm a plus half. So still leaning a tiny bit bullish. But look, we have to be realistic and trade the markets in front of us. The new U.S. administration is causing waves, and they're causing waves on a daily basis. And these waves are going to make or break trades. It's just the way it is right now. If you don't like that, then don't trade. Remember, cash is a position. It is a trade to sit in cash if it's deliberate. If you don't like that, sit it out. If you're in there, realize that your trade can be torpedoed at any time with a tweet or with a true social post. Just understand that's where we are. If you want to avoid that, then you should avoid trading the US market hours. That's going to help alleviate some of that volatility. So let's take a look at all of our currencies. Let's score them from plus 3 to minus 3, and that's going to tell us where to hunt for the week. I'm going to go through crypto really quick, but like I said earlier, there's nothing to trade in crypto. Here's Bitcoin. Take a look at Bitcoin. We have been sitting between 94,000 and 98,000 for about 3 weeks here. If it breaks out of that range, I might become interested, but until that happens, totally uninterested. Now, Bitcoin is looking okay, say the -1, but Bitcoin Cash is looking atrocious. It's more than -2, and you can see just not great. So Bitcoin Cash is not a buy. Ethereum looks even worse. I mean, look at that low base. I mean, this is just telling you it is most likely going to break down. I could easily see this going down into the low 2000s over the next couple of weeks here. This is by far the weakest of the cryptos that I look at. And look at Litecoin. Litecoin is saying, hey, you know what? I'm above the moving averages. Okay, that's great, but that doesn't give me a huge buy signal here. Until we get things turned around, until this uncertainty gets out of the market, until the bullishness comes back into crypto, I think crypto is just a no touch. I'm just not interested at all in even watching it. Moving into Forex. As you can see, the dollar's breaking down. Now, it's not breaking down huge. It's had a huge run over the last 18 months, but we are starting to see bearish activity. So for the first time in really months, we can even talk about dollar shorts because we're now below those moving averages, moving down, and we're just seeing this falling rally. Look, we just want to sell rallies on dollar. So I think dollar is a decent trade here on the short side. It's not going to be a great trade. There's not a ton of velocity here, but where there is a ton of velocity is in the yen. The yen's got a ton of velocity, and you can see here we're running up, and it looks like on Friday we just punched through that resistance. We'll have to wait and see the candle on Sunday and Monday to make sure that we did get a breakout. But everything is scored +3 on the yen. So the yen clearly has the most momentum in the Forex market right now. We come over here to the Swiss franc. The Swiss franc is a +3 on velocity, so we had a nice little turn on Friday. But when we take a look at the daily chart, it's still on a downtrend. So yes, very, very short term, Swiss franc looks like it's getting a little bit of a bid. But in the grand scheme of where it is in its trend, this is probably just a bounce and really not leading to any major move here. So for me, Swiss franc is just uninteresting to trade. Euro is weakening a bit. As you can see, we are below moving averages, which tells us, okay, we want to be on the short side on this one. We are getting this low base here at the low. It's a decent short. It's not a great short, but it's a decent short. So Euro, you could say, okay, Euro is maybe a currency that I would like to short. as well with the dollar. Coming over here to pound, you can see pound here just moving sideways. It's pinned between the moving averages. No thank you. That just is immediately telling me stop looking, Rob. Don't waste your time. Go find something else. CAD has been vacillating between above and below moving averages. At this point, we're below, but look, it's not a trend. This is not a trend. So yes, at the moment, it is a little bit weaker than stronger. Yes, on the velocity score, it's got a pretty nice little pattern here of lower lows and lower highs. If someone said, Rob, I really want to short CAD, I'd say it's a decent trade. Maybe euro's a little bit better, maybe dollar's a little bit better, but they're not much better. There's not a great short out there at the moment. So I think you really just have to pick between those three. Moving here to the Aussie, as you can see, Aussie has shrugged off that 50 basis point cut. Okay, it fell on Friday, but ultimately it's right at moving averages. It's just sitting there. Okay, we're breaking down a little bit of some short-term support here. So if someone said, Rob, I really want to short Aussie, I'd say, okay, you know what? You can make a case for it, but is it really the best one? I don't see it on the daily chart. The daily chart is just not telling me it's the best short out there. And the Kiwi, I'm telling you, the Kiwi has gone from the worst to just dead. And look, sometimes that is how they change trends. So a lot of times they have big uptrends that immediately turn into big downtrends, or vice versa. And then sometimes they have big downtrends and then they just die and they don't go anywhere for a while. And then they start working their way into a new trend. And that's where we are with the Kiwi. So the Kiwi is definitely no longer a short, but I'm not looking for it as a long either. So here we are on our trend score. No question that the yen is the only thing that looks like a buy here. And we got dollar, euro, and I'm going to put CAD in that group. Even though I don't love CAD's daily chart, really looking at dollar and euro. But if we come over here to see what's moving right here, right now, dollar and euro are having little rallies, little bear rallies. Yen's looking super strong here. It tells me that the first of the week, I'm not really looking for something Sunday, Monday, because the pairs I'm really looking for, which is euro and dollar short, are right in the middle of our little rallies. I want to see those turn over before I get short in euro and dollar. So obviously the trades I'm looking for this week is going to be dollar yen and euro yen. Those are the two trades I'm looking at this week. So because we're looking at both the euro and the dollar to go short, let's pair those up and see which one looks the best for a short. This is the euro dollar daily chart. And if I'm looking at this, they've pretty much been the same for the last month. For the last month, they've been oscillating here between 130 and 103 and 105. We are at the top. We are at the top of the range. So if I was looking to trade this pair, I would go short euro dollar, which tells me that the euro is going to be my number one trade, because if they were both shorts and I want to know which one is better, and I look at the euro dollar pairing and it tells me euro is likely to be weaker, that's where I'm going to start out. So my first trade is going to be euro yen. That's going to be my target here. If we take a look at a daily chart, you can see we do have a lot of velocity to the downside, and take a look at where it's all happening. Pretty major support level here, right around the 156 area. We got pretty big support right here. Do we get another bounce? That's the only question I have here is, do we get another bounce here? And I think the only reason that would happen is because the yen takes a little break. But I would love to see a little bounce Sunday, Monday, Tuesday, maybe up into the 157 area. I think that's going to be a nice little trade here. But if it breaks below, I'm ready to jump in this one as well. So again, euro yen really looks really good here. I like this trade setup. I like we're at major support levels. If it breaks that, we could see a big move to that downside. Going back in history, trying to find out where the support is on this thing. Boy, if we break this level, you can see it's a pretty major level. We're looking at possibly going down to 150. So again, that's going to be 600 pips. I think this is the best trade out there at the moment. I also don't hate dollar yen. I think dollar yen is absolutely a decent trade. Doesn't look quite as good as the euro yen, but you can see here we're still right at a support level. If we break that, then I think it's pretty easy to say, okay, if we break that, are we going to head down to the low 140s? Hey, that's like 700-800 pips. I think that's absolutely a trade we can go after. Outside of that, I don't really see anything. If you say, hey, Rob, I don't want to trade yen, then I think what you want to take a look at is, again, Swiss franc is showing a lot of momentum to the upside on a short term. Remember, the daily was still down. Here we have Swiss franc against the CAD. I can't even recommend this. So a lot of times when we do relative strength, we come up with, hey, this could be a good pairing. You pull it up on a chart, and it's not a good chart to trade. So that's where we just throw this one away, and we say, okay, we're pretty limited in what we're looking at this week, looking at those yen trades against euro and dollar. To wrap this up, not many tradable pairs, but again, I think euro and dollar yen look really, really interesting for good trades this week. I'm going to be laser focused on those, especially at the first of the week. Then I'll reevaluate everything and maybe something else pops up. But that to me looks like the trade. Dollar yen, euro yen look great. And the crypto is just not tradable at this point. That is it for the currency room. Thanks for joining me. Goodbye, everyone.